In a statement, Target says it's offered Pride products for more than a decade, but the response this year has been different. Giant Target lost $10 billion of market value in 10 days.
In the world of shopping, Target is ringing some alarm bells. The CEO of this giant company is warning us about tougher times ahead for shoppers, and there's also a big concern about the US economy. Target, you see, is a major player in the world of shopping. They've got all sorts of things from household goods to groceries and clothing. But here's the kicker. These items are about to get a lot more expensive. It's like a roller coaster of prices, and it's been going up since 2019. If you've been shopping around, you might have noticed that Target's prices are already climbing. Even after giving us some sweet discounts to clear out their stock in 2022, they still had to deal with a 90% drop in profits. Ouch. And guess what? They had no choice but to pass those high supply chain costs onto us, the shoppers. Not cool, Target. Now, to balance their books, Target is slapping on some hefty price increases on thousands of products. It's not good news. The CEO of this company, based in Minneapolis, is waving a big red flag for us shoppers. Brian Cornell is warning us about what's coming in the second half of the year. He's talking about rising interest rates. That means using credit cards is going to get more expensive. Plus, there are those higher prices on food and energy. It's like a double whammy. Last week, Target had to lower its profit and sales forecast for the year ahead. Let's dive deeper into this. Cornell, the CEO, said, as we look into the consumer landscape today, we recognize the consumer is still challenged by the levels of inflation that they're seeing in food and beverage and household essentials. We can infer that inflation is eating up a bigger chunk of our family budget. But that's not all. Target missed its sales goals for the second quarter, and revenue didn't meet expectations either. Why? Well, they're blaming it on a gloomy economic outlook and the uncertainty of student loan repayments starting up again. The CFO of Target, Michael Fidelke, pointed out that when those student loan repayments hit, it's going to hurt our wallets. And what pain is going to keep hurting? The part of Target's sales that comes from things we don't absolutely need. The price hike saga continues at Target as they determined to boost their profitability and meet financial goals. Michael Fidelke, Target's CFO, reminds us that raising prices is their last resort, but external factors are forcing their hand. It's not just Target. Other retailers like Home Depot are facing similar struggles. Home Depot, the nation's largest home improvement retailer, reported a drop in sales, especially for big-ticket items like patio furniture and appliances. While Target hasn't revealed the exact percentages of their price hikes, insiders say they could range from 7 to 42% compared to last year. The biggest changes will hit segments like apparel, household appliances, electronics, cookware, miscellaneous household goods, and groceries. Target's strategy for the future involves learning more on the scale of groceries. Christina Hannington, Target's Chief Growth Officer, disclosed plans to invest $500 million over the next 4 years to enhance their grocery category, a space where they've been losing out to Walmart. It's a long-term strategy to mend their financial health. Unfortunately, these price hikes come on the heels of Target being slapped with a $5 million penalty for overcharging and misleading customers through their mobile app. Target heavily relies on thriving e-commerce site, accounting for about 18% of its yearly sales. Their dynamic pricing strategy, which adjusts prices based on your location, is a culprit for varying prices in different regions. The algorithm even assumes that people with a 50-foot radius of the store are committed buyers willing to pay more. But here's the twist. Prosecutors accuse Target of using this algorithm to gauge customers. They claim the retailer tricked customers into paying prices higher than their lowest advertised rates. Sometimes, the mobile app displayed one price while the in-store price was different. To make matters worse, customers weren't informed where they could find the item at the advertised price. Sonoma County District Attorney Jill Ravitch advises consumers to scrutinize items when they're being scanned at the register and double-check their receipts to ensure they're charged at the lowest advertised price. In addition to civil penalties, Target is also on the hook for $200,000 in restitution and over $173,000 in costs to county departments of agriculture in California that led the investigation. Target spokesperson Brian Harper Tabardo has acknowledged the issues and assured the steps are being taken to improve their processes. These problems arose when promotional signs weren't promptly removed that promotions ended. But here's a catch. Finding discounts and promotions at Target, whether online or in store, will become a more challenging task in the fall and winter. As of 2023, Target is considered one of the highest priced retailers. A comparison by Business Insider found that Target's prices are, on average, 15 to 25% higher than some of its competitors. competitors. This price difference is particularly pronounced in the food category. Analysts compared prices on 31 identical items at Walmart and Target and discovered that the same basket of goods cost $95.98 at Walmart and $110 at Target. Compared to major companies like Kroger and Costco, Target's prices were at least 20% higher on various items, including eggs, milk, peanut butter, meat, olive oil, grapes, pasta, quinoa, kitchen bags, goat cheese, and pineapple. Additionally, Target's grocery business is smaller than Walmart's and lacks a supercenter format, limiting its assortment and overall grocery offerings. Notably, Target's fresh produce department had empty shelf space compared to other stores. Shoppers on social media have been vocal about Target's pricing, with some expressing frustration over the perceived overpricing of items compared to competitors like Whole Foods. These impending price hikes are unlikely to make Target more popular. In the second quarter, net sales fell by 4.9%, comparable sales dropped by 5.4%, and digital comparable sales sank by 10.5%. This is in stark contrast to the same period in 2022, when net sales increased by 2.6% and comparable sales were up by 7.2%. Retail analysts suggest that it's not just price increases and inflation causing this decline. The controversy surrounding Target's Pride Month products also contributed to slowing foot traffic and financial losses. In June, the company faced backlash, removed millions of dollars worth of merchandise from shelves, and paid restitution to harassed employees. Investors are currently wary of Target's prospects. Analysts at the retail research company suggested that Target doesn't appear to be a good buy at the moment. Their cautious tone indicates limited potential for a recovery in earnings per share this year. Sentiment surrounding Target stock is largely negative, with Evcore emphasizing that it's too early to consider an investment in the company. JP Morgan's retail analyst Chris Horvers echoed these concerns, highlighting that Target faces significant challenges. The company relies heavily on discretionary categories like apparel, hardlines, and home goods, making up 51% of its sales. The remaining 49% comes from consumable categories. However, rising consumer prices and worsening economic conditions pose a threat to Target's earnings. Moreover, retail theft adds to the gloomy outlook for the big box chain. Hundreds of billions of dollars worth of inventory are expected to be lost this year, with Cornell previously indicating a potential $600 million loss in profits due to missing inventory. This shrinkage is not only costly but also increasingly frequent. During the first 5 months of the year, Target saw a 120% increase in theft incidents. This places merchandise losses well above sustainable levels, impacting the company's financial health. Consumers may end up bearing the brunt of these losses through higher prices. With Americans already feeling the pinch of price increases, it's likely they'll seek better deals at other stores instead of sticking with Target. While the short-term revenue boost from markups may help Target, it risks eroding consumer confidence and causing long-term harm to its bottom line. In a retail landscape where the risk of bankruptcy looms large for major retailers, Target should actively explore more effective strategies to enhance its performance and avoid further hardships down the road. The path ahead is uncertain, and Target faces significant challenges in regaining investor trust and consumer loyalty. If you have found the video informative and helpful, don't forget to hit the like button and subscribe to our channel. Also, feel free to share your thoughts in the comments section below.